Recently, crypto enthusiasts the world over have been excited about the prospect of a spot Bitcoin exchange-traded fund. But why? Because, as I will show in this video, a spot Bitcoin ETF shows what is wrong with Bitcoin as money. For years, many crypto enthusiasts have been hyping cryptocurrencies as the ultimate future form of money. Bitcoin was the first, and still most popular, cryptocurrency. Many people have bought Bitcoin hoping that it will go higher. Although Bitcoin prices have increased in 2023, prices are still far below their peak reached in 2021. Most crypto enthusiasts have been hoping that the SEC would approve a spot Bitcoin exchange-traded fund because they believe a spot Bitcoin ETF will cause Bitcoin to skyrocket. But the SEC has resisted. But a recent court decision now makes a spot Bitcoin exchange-traded fund much more likely. For years, people could buy Bitcoin by buying from sellers and blockchains, or through cryptocurrency exchanges. But many people were worried about getting hacked or losing their private keys, which are needed to either spend or sell their Bitcoin. Many Bitcoin enthusiasts think that the best way to increase the price of Bitcoin is to create an investment vehicle so that people do not have to worry about getting hacked or losing their private keys. There are three main types of investment vehicles for Bitcoin: Bitcoin trusts, Bitcoin futures, and Bitcoin exchange-traded funds holding Bitcoin futures. The Grayscale Trust is the most popular trust for Bitcoins. However, a big drawback is the 2% annual fee. Besides the high fees, the shares of Grayscale often sell at a steep discount to the value of its holdings. Although Bitcoin futures have been available for a while, most people don't trade futures. Future contracts also have increased costs because having a limited lifespan, they must be continually rolled over into contracts expiring later. Right now, the only exchange-traded fund for Bitcoins only hold future contracts for Bitcoin, not Bitcoin itself. Therefore, there is some tracking error between the ETF and Bitcoin, and they still have the rollover costs of futures. The first and most popular Bitcoin ETF holding futures is the ProShares Bitcoin Strategy ETF, and you can see that the market price closely tracks the net asset value, but it only holds futures for Bitcoins, not Bitcoin itself. There are no spot Bitcoin ETFs yet. Many crypto enthusiasts believe that a spot Bitcoin ETF will increase the demand for Bitcoin, thus increasing its price, because, unlike futures, it will invest in Bitcoin directly, and it will more accurately track Bitcoin at a much lower cost. Since institutions and many people do not want to hold Bitcoin directly, and they do not want to trade futures, many investment companies are applying to the SEC to allow them to issue a spot Bitcoin ETF, expecting that such an ETF will propel Bitcoin to new heights, since more people would be willing to invest in Bitcoin as an ETF. Grayscale did make it easier for people to invest in Bitcoin by creating a closed-end trust to hold Bitcoin. However, the share price of the trust is traded at a significant discount to the value of the Bitcoins it holds. Consequently, Grayscale applied to the SEC to convert its trust into an ETF so that the share price of the ETF would closely track the price of Bitcoin. But the SEC has denied the application, so Grayscale sued. A three-judge appeals panel in Washington handed Grayscale Investments a big win in its case against the SEC, paving the way for a Bitcoin exchange-traded fund. The court order does not allow Grayscale to list a Bitcoin ETF right away. It just vacates the SEC's order. But the upshot of this ruling is that spot Bitcoin ETFs will soon be available. The court victory will not, by itself, give Grayscale an advantage in creating a spot Bitcoin ETF. The SEC may appeal the ruling, force Grayscale to reapply for a Bitcoin ETF, or permit all issuers who have applied for a spot Bitcoin ETF to launch at the same time. Nonetheless, just the prospect for a spot Bitcoin ETF makes Bitcoin whales happy. The legal victory also led to a rally in other cryptocurrencies. Even the stocks of cryptocurrency companies zoomed in price. However, the cryptocurrency rally ended quickly, with cryptocurrency prices declining substantially only 3 days later. But is Bitcoin an investment? Investments grow more valuable. Businesses grow more valuable by satisfying a need of society. Bitcoin proponents argue that Bitcoin is a better form of money. Since supply is limited, it is argued, Bitcoin will become more valuable as people adopt it to use as money. But is Bitcoin a better form of money? The primary purpose of Bitcoin was to serve as money that does not require intermediation by financial institutions. The purported benefits is that transactions cannot be reversed, eliminates intermediation by financial institutions, and some privacy is achieved. But how well does Bitcoin serve as money? Money serves three purposes: as a means of payment, as a unit of account, and as a store of value. But these three properties require one more property. Stability of value. The price of Bitcoin changes constantly. From September 2022 to September 2023, Bitcoin varied from less than $16,000 to more than $31,000. People hated the recent 9% inflation, so they will never tolerate the constant deflation and inflation of Bitcoin. Another major problem with using Bitcoin as money is that, although Bitcoin eliminates financial institutions as an intermediary, it does not eliminate the need for intermediaries, namely the blockchain operators, the people who maintain the many blockchains needed to ensure the security of the Bitcoin network. These many blockchains cost a lot of money to maintain, so Bitcoin has high transaction costs. Here, you can see how costs have ranged over the past year. The variation in transaction costs is even greater over a longer time span, at one point even exceeding $50 for a single transaction. This variation depends on the volume of transactions and network congestion. Bitcoin transactions are also very slow. This chart shows the average daily transaction time in minutes. On many days, it is as low as 20 to 30 minutes. But on some days, it can be very long. For instance, on July 1st, 2023, the average transaction time was more than 4,000 minutes. But even 20 to 30 minutes is much longer than it takes to validate credit card transactions, which are validated within a few seconds. While there are various methods being developed to accelerate transaction times, it will never be nearly as fast as credit card transactions, simply because of the way that the Bitcoin network operates. Businesses would not be able to tolerate transaction times measured in minutes or sometimes hours. So, most businesses would not accept Bitcoin as money, especially for minor everyday purchases. But money is also a very important component of any economy. If Bitcoin was a major currency, then central banks would lose an important monetary tool to optimize the economy. For instance, if Bitcoin was the national currency, how would governments have responded to the COVID-19 pandemic? Being able to print money to pay people who could not work allowed them to survive and even thrive, and it saved most people from financial ruin. This would not be possible if Bitcoin was a major currency. Bitcoin mining consumes a stupendous amount of energy. An estimated 150 terawatt hours of electricity annually, more than the entire country of Argentina, and emits 65 megatons of carbon dioxide into the atmosphere annually, as much as the entire country of Greece. Countries using Bitcoin as a major currency would not earn seigniorage, the profit from creating money that will therefore have to be collected as taxes. In the United States, this would be at least $600 billion annually, an amount that steadily increases with inflation. Where Bitcoin is legal tender, it is not being used as such. Bitcoin officially became legal tender in El Salvador on September 7, 2021, but since then, it has been reported that very few people use Bitcoin as legal tender. Bitcoin may be used as money in corrupt countries such as Argentina, especially when it is difficult to get other currencies such as the US dollar. But even Argentines recognize that Bitcoin is risky and would rather use a more stable currency. So let's summarize why Bitcoin will never be usable as money. People do not want to use Bitcoin because they're afraid they'll lose their private keys or that they might get hacked. Businesses do not want to use Bitcoin because transactions are expensive and slow. Governments do not want Bitcoin to be a major currency because it would make monetary tools ineffective and would greatly reduce seigniorage. Finally, Bitcoin is not good money simply because its value varies too much to serve as a convenient unit of exchange and to serve as a unit of account and a store of value. And a spot Bitcoin ETF will not make Bitcoin good money. Indeed, any appeal for a spot Bitcoin ETF only shows that many people do not want to hold Bitcoin directly. And if they do not want to hold it directly, then why would they ever use it as money? And if Bitcoin is not usable as money, then where is its value? So why do so many Bitcoin holders keep hyping Bitcoin and hoping for a spot Bitcoin ETF? Because they want you to buy so that they can sell. For a more complete discussion of why I believe Bitcoin is a bad investment, check out this video. The link is provided in the description, or click the link in the upper right-hand corner. Thank you very much for your time. If you liked my video, please give me a thumbs up and subscribe. I would appreciate any suggestions, so please leave them in the comments below. Check out my website at thismatter.com for more than 850 in-depth fundamental tutorials in personal finance, investments, and economics. Check out my books on money at williamspalding.com. Thank you.